Hey guys, how are we all doing on this glorious green day? It sure feels good to buy the dip. Though both stocks kinda fell down as the day went on, it was an excellent show of force and a rebound as we called it yesterday. What we want is upward consolidation, but we will get to that later on in this vid. First I want to talk about some important updates regarding Evergrande's situation, inflation, and a GameStop article. It seems the media is now trying to get people to buy meme stocks, and there is a good reason as to why they are doing this. I want to go over all of this with you, but before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. I also quickly want to thank all the people that showed up to watch today's morning video. The reaction and comments have been great. Make sure not to miss these episodes, which I will link in the comments below. With that said, let's get started. As you might already know, inflation has been surging a lot this year, with many official measurements of consumer prices rising faster than they have in the past. However, recent analysis of this estimates that these measurements greatly underestimate the situation. You see, the data being compiled in the way it is being measured greatly undermines or outright ignores much of the changes that is taking place, and therefore it does not account for a clear picture of it all. Let me explain. Businesses have been facing supply and labor shortages, but not all have raised prices, which is typically how this type of problem is handled. Instead, many of the businesses that face these problems and not raise prices are instead opting out to give their customers a lesser experience. Businesses are opting to degrade the quality experience of their products or services rather than raise prices. For example, a stay at a hotel room might cost the same as it did last year, but it no longer includes a daily cleaning service due to a shortage of workers. Restaurants offer limited service because of shortage in waiters. Even car buyers are being advised to be more flexible on their preferences, as there is a shortage on many models or even colors in cars. A lot of the general customer experience is being monitored though online reviews and polls, and customer sentiment is falling behind pretty quick along with overall satisfaction. All these things go to show how inflation is not only rising, but the figures being given are not accurate. Government measures inflation mostly through statistics that take into account changes in prices of products and their quality. The process is relatively straightforward to estimate a certain value, but it ignores a ton of other important metric data that show the true levels of inflation. You might be wondering, where can such levels of inflation go? Well, think about it for a second. If customer satisfaction keeps dropping because businesses are opting to reduce cost of business through cutting the experience for customer, then this, as proven by statistics, is reducing the amount of people going out. Yes, there is a percentage of people that will instead opt out for a competing store or restaurant, but many times it drives people to simply not go out. This will reduce the amount of money being circulated in the entire system, which further strains the economic burden we currently face. The problems with inflation are very complex, and no single number or data sheet can truly represent the vast challenges it imposes not only on the government, but on normal everyday people. I continue to believe inflation to be a driving factor that will inevitably drive us to a squeeze unless time or an issued NFT takes us there first. Developers all over China's property market are running up huge debts. You guys remember how I was warning about contagion in the entire property market for weeks? Well, the time has come for China to enter what economists say is the final stage of one of the largest real estate booms in history. Confronting a staggering bill of more than $5 trillion in debt that Chinese developers took on when times were good, China confronts a nightmare scenario. For comparison, this debt is more than the entire economic output of Japan, the world's fifth largest economy, and is nearly doubt the debt of what it was at the end of year 2016. With warning signs flashing over the contagion of development companies, now amount to about 2/5, global markets are beginning to brace themselves for a possible wave of defaults that looms around the corner. A notable change has been in the tone of Chinese authorities, with many of their leaders appearing to now get very serious about addressing the debt with moves to curb excessive borrowing. However, doing so will likely torpedo the property market completely, cripple more developers, and derail the country's economy quicker than you can say Kenny Griffin lied. We recently talked about how luxury developer Fantasia failed to repay $206 million in bonds on October 4th, which followed Evergrande's 2 missed payments for bonds. You guys know how a minute ago I said about 2/5 of developers in China are flashing danger of defaulting? Well, Already the media and economists are trying to prevent chaos from rupturing across the entire market by trying to save face and appease executives and investors by making some cringe statements. They state that most Chinese developers still remain healthy for now, which is technically true, but it completely ignores how the problem is manifesting and sweeping all healthy developers. In the beginning it was just Evergrande, and now it's 2/5 of the developers just 1 to 2 months into this whole ordeal. Where are we going to be in 2 months from now? That is when all these economists get real quiet. They are most likely trying to save face so that they can execute their trades and be safe before a potential decline of everything in the sector. Things are about to get incredibly rocky with this whole Evergrande scenario that has gone way out of control, so I am going to continue bracing myself in my favorite hedge stocks. Funny enough, the second worst financial advisor, Seeking Alpha, agrees. Titled, "It's finally time to buy GameStop stock," Seeking Alpha has done a full 180 on a stock that it has belittled and lied about for over a year. Their main points being that GameStop looks like it is forming a bottom with good balance sheets bias on the upside. They are now enticing people to buy the legendary stock. They also talked about Wall Street legitimizing the stock, as we have seen so many institutions buying into them over the past couple of months. The article then concludes that GameStop is no longer a meme stock, but a rational and fundamentally backed one. I have 2 thoughts on this that I think you will want to know. One is that there is something sketchy going on. The balance sheet was reported over a month ago. We know it isn't going down and that Wall Street has been buying into this for months now. So why are they making a case for purchase now when all the fundamental analysis they have done has been out for months? Nothing new has happened that they can point to as a new development that has changed their mind. In fact, everything they said in this article sounds a lot like what I have personally been saying on this channel for months. That fundamentally, GameStop is the best hedge, that Wall Street is buying it, that it has a clear path forward as a company with a revamped business model, and that its popularity alone will guarantee the price to keep on rising over time. I have no idea why they are now making an article about this when I have been saying all of this for months, but I do have a theory, which takes us to my second thought. We know that people that read through Motley Fool and Seeking Alpha tend to be a different demographic from those which trades on Reddit or Twitter. As such, common sense will dictate that many of them trade using the most popular brokers such as Public, Webull or Robinhood. This type of article from Seeking Alpha has shown to bring a certain amount of bullish volume to the stocks they talk positively about. This could be that they are trying to drive normies to buy the stock through retail because Wall Street needs all that extra money, since most meme stock investors are making sure to route their orders so they don't go through dark pools, or even worse for them, they are directly registering their shares through ComputerShare, which is another huge impediment that will cause the squeeze as more people get it. Funny enough, the disclosure of the writer of this very article says that he does not have any positions on GameStop, but that he might in the next 72 hours. I think there is a bit of reverse psychology working here, and they also want to be technically correct when GameStop hits its next run so that they can say, "I told you so." Be careful with these articles. Remember that these people are never your friends, especially when they say the things that you want to hear. Now, let's talk about today. The Fed did not report total reverse repo operations for the day. Dark pool trades for AMC accounted for 62% of the total volume today, while GameStop's dark pool trades accounted for 43% of the total volume today. According to Fidelity data, sell order flow for AMC was larger than the buy order flow, with GameStop experiencing a larger amount of buy order flow than its sell order flow. Let's now talk about performance. AMC traded bullishly today, losing under 1%. It was traded bearishly through most of the pre-market, but slightly after the markets opened, AMC bounced up from 36.30 to over 38.60. It was unable to find a strong support to consolidate, and continued trading bearishly with failed attempts at stabilizing. Towards the end of the day, I noticed the stock being able to hold support more consistently, closing at 37.25 below the VWAP. As for tomorrow, we really need a strong push and break over 38.50. If we are to touch $44 again relatively soon, AMC needs to break through that resistance. Being unable to do so today, I am not looking at a bullish outcome for the rest of the week, but that as of itself is good news for anyone intending to buy it. We did end higher than we close on Friday, so take that a ray of hope for now that we are climbing, but like I said, we need to break through that 38.50 once and for all. AMC has support at 37.21, 37, 36.30 and 35.64. It holds resistance at 38.50, 39.50 and 44. GameStop traded bullishly today, gaining over 3%. It opened to a bull run from 173 to 188.49. After that, the price consolidated and it was ready to retest that resistance before it was shorted and started dipping. The fall wasn't too dramatic, but it was consistent all the way to the end of the trading day. GME closed at 178.10, below the VWAP. As for tomorrow, it's a bit difficult to say. GME is definitely oversold and it should have a proper bounce back under normal trading conditions, but we know this stock traded on a different set of rules. It is likely that GameStop could enter an ascending triangle with resistance at 188.49. It has been elevating its bottom price for the last 4 trading days in consecutive. I am starting to get really bullish for it, but also do remember to ground expectations. Remember, this could be a trap to get people to buy options and then sink this price below 170 again by Friday. For now, I am super happy with GameStop. And that is all I have for you today. Thank you all for making it to the end of the video. Let me know your thoughts and opinions down in the comments. Today was definitely a good day, and though the future is relatively unpredictable in the short term, days like this fill me with tons of joy. The community defiantly felt more alive than it has for weeks, and it was really good to see so many people happy. Though darker days await us, remember that in the end, perseverance and patience will reward a never-ending day full of opportunity, joy and financial security for the few that make it through. If you don't mind and found the video fun and useful, feel encouraged to hit the like. If you want to support this channel, guys, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.